Forex Daybreak podcast, where we trade the Forex market with you. Entry, target, exit, and stop loss levels are covered when we walk you through every trade made in the show. 5% of Forex traders are profitable, and you can be among the winners. If you wish to find out profitable trade signals in the Forex market, Forex Daybreak is the show for you. Now, let's begin today's episode.
Good morning and welcome to episode 82. Forex pairs in this episode are EUR/USD. The strong move from the ECB rate cut yesterday has been dealt with. We will find out what's next for EUR/USD. Pound dollar, a strong move also to the upside from the ECB release and more complex wave structure in pound dollar. And euro pound, same here. ECB release made big spike on the charts and we have met our expected price levels. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. First up is EUR/USD. So spectacular move witnessed yesterday when euro took off from this ending diagonal triangle like a rocket ship, and let's see how many pips. I think over 400 pip move, 465 pips altogether from the absolute low to the absolute high last night. So quite a move. And one thing that is interesting here, that euro strengthened a lot as ECB cut rates, and even unprecedented minus 0.3 I think was the rate right now. So when rates move into a negative territory, there's strengthening in the currency. So this is the madness we live at the moment. Central banks are doing something that nobody thought was possible. Even maybe if we go back 1 year or so, nobody would have thought that we would have negative benchmark interest rates, and even that the consensus and the economists' opinion that we should have even more negative interest rates. So this is quite unprecedented and complete insanity in my opinion. But this is what we have. We are interested in the movements on the currency market, so it doesn't really matter what is the case. We are here to trade and try to predict the moves on the market. So ending diagonal, then sharp move to the upside. This is just what we have right now. Again, Elliott wave principle proves its power. We get just what we anticipated from the wave structure. But we have still a little bit unclear situation here, since there's, I think, two interpretations of this recent move. So we can now conclude that this powerful move yesterday may be the start of the correction or actually the C wave of the correction. So I will draw it here. The ending diagonal started from 108.3. We have 1, 2, 3, 4, and perhaps this triangle ended here, and then this complex sideways structure may be the A wave of the correction. So perhaps we have here A wave, now a B wave. So 3 wave structures for the A wave, 3 wave structure for the B wave, and now this yesterday's 450 pip, 460 pip move is the C wave. So this can be a concluded corrective wave 2, and next move might be to the downside. And if we take a look at this structure on a smaller time frame, we can actually go all the way back to a 15-minute chart here. So here we see a 15-minute chart of this yesterday's move, and we can draw here, we can see a clear 5-way structure. So from the low we see first peak here, move down, another strong peak, a move down, and then even a smaller 5-way structure, all the way up to 109.9 approximately. So perhaps we have seen now the end for this correction, and next a larger move would be to the downside and a continuation for this large decline. Remember that today we have the NFP figures released, and of course this can be a very powerful move to the downside on EUR/USD. So very interesting situation here. The other possibility is that this strong move is just the A wave of much larger and sharper correction, because Elliott wave principle will predict quite accurately the movements on the markets, but the time that it takes to form these, it is impossible to predict. So some correction might take weeks or months, some correction might take minutes or hours. So we might have a situation here that we have just corrected a couple of months of decline in a few hours. So these situations are quite hard to figure out, and we just need to wait for confirmation on this. So if we get 3-wave structure, the downside a larger 3-wave structure, and then more upside, then we have seen only the A wave now and can expect another move similar than this powerful move to the upside. Let's go back to the 4-hour chart. So this yesterday's move near 110 level might be the whole correction or the last wave of this correction, corrective wave 2, and now we can expect maybe a move to the downside and a continuation for this decline, and this next decline should be even more powerful than the one we had from the 114.94 all the way down to 105.19 approximately. So very interesting situation here. Let's see how this plays out. I wouldn't trade this pair today since there can be very high volatility still. Yesterday was quite a ride, but the result was quite clear. A 5-way structure and perhaps a C wave of this minute wave 2 correction, and next move might be to downside, but this is unclear at the moment, and once we see more structure on this pair, then we have more clarity, and of course the NFP today will bring more volatility definitely into this pair and also other US dollar pairs. Let's see a couple of other pairs. Let's see pound dollar quickly. So yesterday's move manifested here on a pound strength. We have erased all the gains that were made on this week on pound dollar. We are back on 151 to 151.3 territory, and the structure in pound dollar is getting more complex. Maybe we are still forming a corrective move on the way down, or even a larger correction. So minute wave 2 correction might be still forming. Also no trades on this pair. Let's see how this develops. And my view of this is long-term bearish, but once we see this corrective move over, then we can start to think about trading this pair again to the downside. Let's see euro pound. The analysis here was that we needed a C wave towards 0.72 level, and this is exactly what we have. We have a strong C wave, and the high was 0.725, quite nicely 0.725. Yesterday we had a small decline first at the beginning of this ECB rate decision, but then we got very strong move to the upside. So we have 200 pips yesterday on this pair. So the EUR/USD reaction was the strongest that we had on this ECB news release yesterday. In my opinion, this concludes the C wave and at the same time a minor wave 2. We might get one more smaller wave higher if we draw this structure here. So from the low of this B wave, we see now completed waves 1 and 2, then Perhaps the third wave is something like this. So a third wave might be completed on the 0725 level. We might see a sideways move next and maybe one more wave higher before resuming the downtrend. But of course this can be already completed. The wave divisions are hard to figure out since we first have a lot of sideways, more complex price action and then a powerful spike to the upside. We have met our criteria for this C wave. We have reached the level I was hoping it to reach. So euro pound might be starting the next larger wave down. And in my opinion, this strength in euro is only temporary and was of course due to this ECB release that they are not cutting their rates as much as expected, which is quite mad in my opinion. If you push rates even further into negative territory, how can this be positive to any currency? But this is just the madness of the central bank policies and madness of the currency markets as well. There is no logic in these news releases. That's why I'm very much against trading the news. There is hardly any rationality on the news releases. So if you trade only based on news releases and rely on the numbers they release, this is very uncertain strategy to trade with. Of course, there is movements in the markets based on the news, but news are not the primary force that makes the market structure. It's the other way around. The market structure is formed and the news are formed based on that structure. Okay, that's it for today. Visit the show notes at ForexDayBreak.com/82 and let me remind you that you can get this video analysis, daily trading signals, weekly future trades video, books and access to my trading system when you subscribe to my basic membership. Membership fee is only $10 a month and I have a 14-day free trial for you to test out my service. You can cancel with one click, so this is truly a risk-free offer. Go to ForexDayBreak.com/basic and sign up today. More trades next week. Happy trading, and I will see you next time. Bye-bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.ForexDayBreak.com. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.